Guys, the markets ended up down a lot today, but it wasn't as bad as the day started out. Last night, actually, I was laying in bed checking futures, and all of a sudden I was like, oh my God, the Nasdaq's down 2.9%. I got a little tickle in my underbelly, and I was texting Dalton. I said, it could be a big day in the market tomorrow, and then markets rebounded. But here's the red for the day. And just like the other day when we had a big red, look at a lot of green here. A lot of green over here. But what drove it? Of course, you have Apple, biggest company with NVIDIA, two big down companies here for the Amazon is basically even. Tesla. Now, here's the thing. Was Tesla hit because of this tariff thing? The 5% down? It seemed like a big hit for a company that's building all of its cars in the U.S., but of course, I'm sure they rely on overseas products. And guys, Palantir just reported. Let's go see what they're doing. Let's pull up Palantir. Before I tell you what happened, let us see how they're doing after hours. They're up, 14.5% after hours. They have crushed it. They were expected to report 11 cents per share and $776 million in revenue. They reported 14 cents per share, $828 million in revenue. Incredible beat. Palantir has absolutely crushed it. Guys, this thing was only $5.83, 2 years ago? And even if you bought at the peak, when that other moron said to buy it at $45, you've still crushed it. 4 years later, you're up over double. Nice work. So guys, look at that. 45 down to basically 6 and back up to 95. Incredible. Now, remember, we're principle-driven investors. We don't look at the short run to determine if we're right or wrong on a company. What we look at is say, we want to determine what the intrinsic value for the business is because we're investors, and investors focus on the fundamentals of the business in the long run. And every investment is the present value of all future cash flows. And this company is growing its cash flows like crazy, absolutely crushing it out there with their cash flows. Man, oh man, $206 billion market cap and a great balance sheet because look at this enterprise value at or lower than its market cap. Incredible. Absolutely incredible. I cannot say anything less than that. So guys, here are some things directly from Palantir's quarterly report. U.S. revenue grew 52% year over year and 12% quarter over quarter. Incredible. U.S. commercial revenue, 64% year over year. U.S. government revenue, 45% year over year. Here's what I like the most. Commercial revenue up 20% quarter over quarter. Man, oh man. Revenue overall, 36% year over year, 14% for the quarter. Guys, closed 129 deals of at least $1 million. And this is a big thing because 3 years ago, this company was focused on big contracts. And I think they realized, hey, listen, if we're going to get diversified here, we got to be willing to take smaller contracts because it's really tough to get big government contracts. There's a long sales cycle. I think they did the right thing here. And they're really on the forefront of AI. Adjusted free cash flow, $517 million. That's a 63% margin. Guys, this is a company you got to look at their cash flow. The earnings per share are not doing it any justice. How the hell did they make $517 million in free cash flow and $828 million in revenue? That's insane. Man, oh man. U.S. commercial remaining deal value up 99%. Closed a record-setting $803 million of U.S. commercial total contract value, which is 134% year over year, 170% quarter over quarter. Guys, this company's done better than I think they even thought they could do. And you might sit there and say, no, that's not true. Now, are there issues with Palantir? Of course there are. One of the things is the insiders in the company have sold like $2.5 billion worth of stock as of late. Now, you might sit there and say, it's only 1% of the company. True. But how much of their net worth is that? Alex Karp is a psychopath. He's an absolute nut job. That could be beneficial because Steve Jobs was a nut job. Bill Gates was a nut job. A lot of great CEOs have been nut jobs. So maybe it works out for them. But this company is absolutely crushing it on, how many metrics here? How many metrics? And this is a great, and what I love about this is they were up today on a big red day in the market, and they're up big time after hours. That's very tough to do, guys. $95 per share. That's incredible. This is a $220 billion company now. Let's look at their analyst estimates here. Because again, look at this, 48 cents a share. No way. That's They make way more than that in free cash flow. To $1.08, only doubling in the next 4 or 5 years? How's that possible? With revenue growth of 24.5, 21, 23, 19, and 18%, growing to $7.5 billion. Guys, at $7.5 billion, and they're able to keep 60% free cash flow margin, that's $4.2 billion in free cash flow. Assigned to it, here's where I get the issue. Assigned to it 20 times or 25 times multiple to free cash flow, you're at $105 billion market cap in 2029. Well, the current market cap is $220 billion. That's the only concern I have. You look at the saying, is this a situation where the company's crushing it and the market's driving up that price and maybe they're assuming too good of a future? I don't know. But this company is absolutely crushing it. And old Paul would have probably sold if I owned the stock saying, you know what? This company's way overpriced. New Paul might be like, maybe not. I don't know. But this kind of worries me right here. This is like, okay, but look at this, guys. I mean, 52% total revenue. I mean, revenue grew 36% year over year. Now, can they do this forever? Probably not. But can they do this for a few more years? Yeah. But how do you get the juice out of that? How do you get more juice out of that squeeze when you're already factoring in a near flawless? Let's take a look at this. Let's do a stock analyzer tool, because this is exactly why we have this tool. It's about putting the numbers and the story together. And I'm going to pull up Palantir. Now let's do Palantir. When did I do Palantir last and see what I can change? Okay. This is a 10-year analysis, remember. 10-year analysis, okay? And I did 12, 18, and 24. Let's go more aggressive. Let's go 15, 25, and 35. Now, for that means that 1.35 to the power of 10, and they did 2.5 billion. That'd make them 50 billion in revenue in 10 years at 35%. At 25%, that would take into 23.3 billion. Still a lot. And 25% revenue growth is very, very difficult. Amazon did it because Amazon is we sell everything to you and it gets to you in 13 seconds company. Is this still possible? Sure. So let's assume that for the center. Profit margin and free cash flow margin. Oh boy, this is hard. Let's go 30. Let's go 35, 50, 65. I mean, I'm just going high here. PE, 20, 25, and 30. 20, 25, and 30. And my 9% desired return is basically looking for intrinsic value. I hit the analyze button. Guys, like I said, I still have a hard time getting to this number. At the current middle estimates, I'm at $63 a share in value versus 95 today. And that's with 25% growth rate, 50% margin, and 25 times earnings. And that's assuming no margin of safety. Let's put in 12, 14, and 16% margin of safety. We're down to $40 here. So guys, every investment's the present value of all future cash flow. It's the second metric, the second pillar of our principle-driven investing. It's so important to understand that because anytime you outlay money for an investment, your returns are going to be based on that money you outlaid and present valuing all the payments you receive in the future. The more you pay today, the less your returns are going to be. The less you pay today, the more your returns are going to be. Because those future cash flows are probably going to be successful no matter what the stock price does in the short run. And guys, I spoke a little wrong here, incorrectly here. In 2024, they did 1.9 billion in revenue. So those future revenue numbers I talked about, it's not going to be as high. It's actually going to be 25% lower. So the stock price has to be assumed for, I mean, it's incredible. Oh, but look at these numbers year over year. 38% U.S. revenue, 54% year over year for commercial revenue, 30% for U.S. government revenue. Overall revenue, overall revenue is 2.87 billion. We're good here. I was only counting U.S. here. Man, customer count 43% year over year to 711, up from 497 a year ago. Free cash flow of 1.25 billion, and that 2.87. What is that? 40%, 45%? What is that number? Somewhere around there. I look at this going, this is awesome. Great numbers. But if all that matters is the story, okay, pay 10 trillion for the company, you're done. You're going to make a great return. No, that's not the way it works. That's the point. And just like on the way down, you go to the other extreme, $1 for the company, you'd be like, yeah, it's all day long a no-brainer. This somewhere in between is where it makes sense. That's what we're trying to understand here. Because our fifth pillar is a great story can become a bad investment if you pay the wrong price. That's one of the most important things I want you to understand. And that makes sense to you because if you apply it to your phone, great phone, 10 million bucks, that's a terrible phone. It's not going to do any good. $1, you're going to buy these things right and left. That's what I'm trying to get at. So guys, if you like all this, you like our tools, go have a conversation in our community about Palantir because I guarantee people are talking about it in here, right up here. People are talking. And a great day like today with Red, people are talking and active and excited. I get messages all the time on Twitter, Instagram, and in the chat saying, Paul, I love how you changed my way. And I didn't change anybody's way of thinking. I just say things that I believe. And if it rings true to you, awesome. That's great. You're going to use it to be better. But don't forget, the markets have been up a lot lately. So don't allow that to make you think you're a better investor than you actually are. But join the community, $7, 7 days, everythingmoney.com/sign up, or click the link in the description below. $1 per day. Go check it out. Thank you for your time.